Hi everyone, welcome back to another video. In today's video I'm going to be going over my Freetrade dividend stock investment portfolio update. Just basically going over how certain stocks have done, my movers and fallers, and just giving general information about companies. So before we get into the video, guys, please like the video. It's detrimental to the growth of my channel. The more likes the video gets, the more my channel gets boosted, and the YouTube algorithm will hopefully pick my channel up and boost it out to more people. Leave a comment, and also don't forget to subscribe if you haven't. I do a lot of these content of investing and general portfolio updates, etc. So hey guys, I'm going to be sort of changing the way I do this video today. Obviously I'll be going over my activity tab at the end and just showing what I've bought, any dividends that I've received. But usually I go over every single stock in my portfolio, not into too much depth, just showing you really how much I'm up or down in. But I've had a couple of comments just saying if I could talk a little bit more about news about a certain stock rather than just saying how much I'm up or down, which they can see, which you rightly can see. So I've decided to set this advice on board and not talk about every single stock in the portfolio, just sort of go over certain stocks I think are worth talking about this week. So we'll get into it now, guys. Obviously the portfolio is £3,723.21. I'm down £102 overall, as you can see, mainly due to the big dip from the pandemic, which is still recovering from quite nicely. It's still a bit volatile, but overall I think the graph is looking on a healthy scale, going back up. But still, good shopping season for stocks, guys. But the first stock we're going to talk about today is the Starbucks stock, ticker symbol XBUX. So you can see I'm down 16% overall. I have 4.24 shares, an average cost of £70, with a current value of £249 invested overall. So again, Starbucks, over last year, they're down 20%. And not too much in the last month or so. Not much movement, but as you can see, once around about $90 stock, which I do feel was overrated at the time. I do think between 80 and 90 is a good price for Starbucks. Obviously down to $58 back in March, which I think would have been an absolute steal. You can see again, slowly going back up, guys. They have their ups and downs, but generally they are in the right direction. Now sitting at $77, still slightly below fair value, I think. But obviously management has been busy increasing the global market, opening stores in existing and new marketplaces, remodeling existing stores, deploying new technologies similar to what McDonald's have done a few years ago. Obviously trying to control costs and more brand building. But they are expected to open at least 500 new stores in China despite the pandemic, but they still managed to open 130 new net stores in the third quarter, which is obviously good, opening more stores, trying to increase that revenue, but as well implementing new technologies to try and control costs. It is also opening a partnership with Alibaba, which you can now place orders via multiple Alibaba groups, mobile order and pay, where you can order products from Starbucks and then go into your store and pick it up, which again is a great bit of initiative. Easy ordering on the go, you can just go straight in and get your order, which is really good. Obviously I do think Starbucks is quite a high demand, as people tend to like the coffees quite a bit, and obviously with the stores being shut for I'm not sure how long it's been, but with the pandemic and lockdowns, earnings will have been affected. It's just how it goes, but I do think Starbucks will recover quite well, and I'm looking forward to see how they do in the future. So that's the first stock on the list. So now we'll take a look at my second stock in the portfolio, which I'm going to be going over, which is BP. BP, I'm down around 40% with £65, 40%, 35 shares owned. My average cost is £4.60 and my value of the whole investment is £98. Again, oil and gas has took a massive hit over the last, well, maybe year overall, but especially in the last 6 months, down 42% in the year. Again, BP have been struggling. They've had a dividend which has been cut in half from around 10% to 4%. A net loss of £1 billion and a total debt now of £76 billion. So again, BP, obviously we had the oil and gas crashes not so long ago, which obviously had a massive effect with the supply and demand, people not going to work due to lockdowns. Obviously the pandemic has had effects on pretty much every industry besides the tech industry, but some have been hit harder than others. So, but a good plus point with BP, they do want to cut the oil production by 40% by the year 2030, which obviously shows you a sign where they want to go. They want to be investing more in carbon footprints. They want to up that by 1,000% by the same year. So in 10 years' time, I do think BP will be pretty much non-existent with oil and gas, which I think is good really, because it won't go on forever. They need to be finding more alternative energy solutions, so I think that's a plus point. Again, they've recovered from big things in the past, BP, so I do think they can do it again, which I think some of the competitors aren't doing, which I'll go on to, which is another stock I'll be talking about, which will be interesting. So yeah, that's BP stock, guys. Again, I do think I'm going to try and average down the position when I can. I do think they're at a really, really low price, the lowest they've been for at least 5 years, a long time. So, and I don't think they're going anywhere anytime soon. Despite the debts, I do think they'll recover. So we'll take a look at the next stock, which is Shell. Obviously, again, another oil and gas industry company. I'm down a massive 50%, over £111 down, 10 shares owned with an average cost of £22.21. The value of my investments now slashed in half, pretty much to £110. Again, unlike Shell, suffered massively with the effects of lockdowns and pandemics, probably more so than Shell. But the one thing that does sort of strike me with Shell is I don't think they're looking into as much alternative fuel as BP is, which could be a problem in the future. You think whoever's in charge would be sort of looking at this, but I've done my research, so I've not seen much to say that they are going to be doing that as much. So again, that could be a bad sign. The recovery graph doesn't look as good as BP's either. They're only 5% higher than they was in the low back in March. Not much recovery so far. And also Brent crude oil prices have been pushed back, and the oil prices have slipped 1%. So again, BP, once a good dividend payer, also cut their dividend by a big amount. The future's not looking as bright for Shell as I think it is for BP. Again, let me know if you've seen any other information in the comments about Shell, if you think they're a good investment for the future. So that's that stock on the list. The next stock on the list will be Imperial Brands, which I'm down 34% in. I have 7 shares of Imperial Brands, average cost of £19.58. Current value of my whole investment, £90. So as you can see, in the last month, down a massive 7.18%. Obviously, the news is that investors are not as attracted to tobacco products anymore due to the unethicalness of them, and obviously, again, like the oil company has been hit hard, and the sector's been hit hard. And I'll get into another stock, which is another competitor of Imperial Brands. Like, I don't think Imperial Brands are pushing towards as many alternative uses. I can't even say that word. Alternative uses of tobacco. Obviously, I don't think it will be around forever due to how bad it is for your health. The dividend cut has been 33%. Again, once a really good dividend payer. Now, not so much. As well as governments cracking down on the tobacco industry in general. So, bleak times for Imperial Brands. I think this could be a stock where I could be well cut my losses, but I really don't want to sell at a 34% loss, but we'll just have to wait and see. So that's Imperial Brands. Sorry about that, guys, with a slight technical hitch there, but my next stock I'll be talking about is a competitor of Imperial Brands, which is British American Tobacco, which themselves are down 3.49% in the last 30 days or so. The tobacco industry obviously has been struggling, and last year they're down 12%, not as much as Imperial Brands, which is a good sign. I thought I did buy a fairly low price at the time of when I bought them. I did buy them for around £29, and they did shoot up to around £35-36 shortly after that. But then again, it was the big dip from there. Yeah, £34 it went to, down to around 25, and now again, they did have a slight rise, but again, not much movement overall. So British American Tobacco analysis of Goldman Sachs confirmed that the British American Tobacco shares could rally as much as up to 47% after reiterating their buyback rating for the stock issuing. Prices could also soar due to them being well positioned in line for next generation products. What that means is basically alternative products to smoking, such as e-cigarettes and vaping. So they are forecast to be, for the next gen products, that they will generate 4.25 billion worth of revenue in the year 2025. So that's some amount of revenue there, guys. If they can actually do that, that'll be really great for the stock. So obviously smoking isn't the most ethical investment really, due to how bad it is for your health. So yeah, I do think they are more in line to do well than Imperial Brands in the future. Again, Shell and Imperial Brands, two stocks I'm looking at really from shopping from the portfolio. It's just about trying to get the right time to do it, but as you can say, you can never really time things well in the stock market on purpose, so no one really knows what's going to happen properly next. So that's British American Tobacco. The next stock on the list I'll be going over is Taylor Wimpey. I have 14 shares and I'm down 32.53% with them, down further 5% in the last 30 days. So I have 14 shares, average cost of £1.81 and the current value is £17.10. So Taylor Wimpey, obviously they have made a loss of £38 million, which is mainly due to sites shutting down, which means house completions are likely to be down 40% this year, which obviously will inevitably impacts the revenues and margins for 2020 and beyond, and have a knock-on effect on the 2021 performance. This is again due to pandemic. Obviously, you have to have a look. They were soaring before. It was up 54% overall, and then all the way down like that, down 20%. So really down 70% overall there. But still, they've gone up a little bit, up, down, and back. So not much movement. Again, obviously the pandemic has had a big effects on a lot of industries, as I've already said. But again, but houses will be built, but it might be later. And obviously, construction sites are back open again now, so that's a good sign. And also, a CEO of the Taylor Wimpey company stated that the dividend will return by the start of next year, which is a good sign. The dividend is coming back. So obviously Taylor Wimpey will be now very, very busy. They have a lot of sites opening, and obviously trying to get houses done as quickly as possible. So that's that stock. So the next stock we have on the list, which is Ford. Ford, I'm down 33% in. I own 36 shares of Ford. They've been struggling really for a while. They sort of had a bit of a bounce back, as you can see there. Bounce back, they reached around $7 again, which was, they haven't been there for a while, but now back to just below that again, 666. That's a weird number, the devil number for Ford there. So anyway, but the Q2 earnings report was a not £1.9 billion loss, but the results were better than the £5 billion which was expected. So you've got to try and look at the positives there. Still a massive loss, but not as much as they expected. So, and again, they've had recent growth in the stock after revealing a brand new 2021 Ford Bronco and the new 2021 Ford Bronco Sport. The limited edition 2 and 4 doors, which sold out in just a few hours, plus the Bronco Sport, which also sold out in 2 days, which has caused significant spikes in the website traffic. Obviously, a new product come out, which has obviously helped them. Again, Ford, I do feel like they might have a little recovery in the future, but a lot of people have been sort of tanking this stock, saying it's not the best investment. They've also cut the dividend, which I've stated in previous videos. Hopefully they'll get that back, as it was quite a good payer. But yeah, we'll just have to see how the future holds for them. So yeah, that's all the stocks I pretty much wanted to go through today, guys, on the list. Just some notable mentions for a couple of stocks who I have in my portfolio which have done reasonably well. Obviously, Apple, which I only own a fractional share in. We'll just take a look at those now. Apple, I'm up 23% with my investment with Apple, just 0.153 shares. Up a massive 27% in the last month. So as you can see, I'm up for sort of suit to that. Again, also, they are announcing the stock split as a 4-for-1. So basically, if you have 4 shares, you want 1 share that'll be split into 4, and you can see how it goes. So it'll be around about $123 per share rather than $497. They've also reached a market cap of $2 trillion, which is absolutely ginormous. So obviously a huge company. Again, won't be going anywhere anytime soon. So Apple, they're going to be splitting the stock, £2 billion market, trillion, sorry, God, third time lucky, 2 trillion market cap. So yeah, good time to be investing in Apple, really, especially now with the stock split. It'll be cheaper and more friendly for investors. So the next stock I'm going to look at, which has a bit of positive news, which is Johnson & Johnson. It's just below its 52-week low. Obviously up 1.83%, and in the year they're up 16.3%, even with the big dip back in March. I'm up 9%, just under 10, which is not bad. like I said, they're just below the 52-week high, which was 157, which was not that long ago, to be fair. So they've also set to buy a biotech company, which is Momenta, in a £6.5 billion deal, which will expand the world's largest healthcare company's portfolio of treatments for autoimmune diseases. This will give Johnson & Johnson's drug-making division, Janssen Pharmaceutica, access to Momenta's pipeline of products and promising treatments for rare muscular diseases. So again, another big buy for Johnson & Johnson, a company that's keeping growing, a big dividend king, and one I'll be looking to add to in the future. So yeah guys, that is the stocks on my portfolio. Hope you like how I've done that today, just give a bit more information, not going over every single stock, just sort of going over stocks I think that are worth mentioning. On the activity list now, we'll just take a quick look. So since my last video, I've purchased 1 share of Coca-Cola, a few fractional shares of AT&T, Pfizer and Verizon, which is from dividends that I've received, which have been reinvested. 8p dividend off Apple, £1.43 dividend from Colgate, and then my big dividend, which was from AbbVie, which was for £4.61, which got reinvested straight back into the company. And then also a BA Tobacco dividend of £1.05. Reinvested a couple of fractional shares into Starbucks, and then finally my latest bit of activity was a 96p dividend from National Grid. So yeah guys, that is pretty much it for today's video. Caught up my activity. Just let me know what you think of the video. Don't forget to smash the like button and subscribe, helps the channel out loads. So yeah, I'm going to leave you to it today guys. Take care. Bye.